GM, today's daily lesson. I'm going to talk about opportunity, pessimism, optimism, chaos, uncertainty, all of these concepts. It's all quite sentiment based, psychological based. But you have to understand something really simple. Everyone should learn first how to be a technical trader. You must learn systems, because without a system, you can't manage risk. But once you understand systems, and this is exactly what smart money do. Smart money have their reasons to enter, reasons to exit. So they will enter based upon some price level, a moving average, whatever. A deviation, volume weighted average price, Bollinger Bands. You can enter and put your stop loss based on any of those reasons. But you have to zoom out first. You have to actually be in a position to look for opportunity to get long or get short. So what the smart money do is they condition themselves to always look for opportunity whenever things are going bad. Whenever there's fear, whenever there's catastrophe, whenever things are blowing up, when everything seems terrible, when there's nothing but red candles, they are looking actively for opportunity. Now, it doesn't mean as soon as there's a crash, you just get long and it bounces straight away. These things take time. You have a big collapse like FTX collapse in 2022. Go and look at the chart. It was the absolute bottom. But it took 3 weeks to rally. Guess what? Smart money, big money, millionaires, billionaires, they don't need it to bounce in a day. They see the catastrophe and they begin to look for opportunity to build a position. They accumulate. That's why after a capitulation event, which if you've seen the Wyckoff lessons, you'll know that that's the climax, the selling climax. That's why it forms a range first, because it's an accumulation range. So if you ever feel like you can't catch these turns, or you don't understand or don't know, or you see the big collapse and think, yes, it must bounce now, understand that you are directionally correct. The only thing that matters is time. So when you see a big event of fear, a crash, bad news, someone's gone to jail, someone's done a scam, someone's done this, done that, something's been rejected, there's been a lawsuit, and there's a big down move, understand that you should be looking for opportunity. Opportunity comes in all forms. Now, similarly, those exact same people, because remember, the smart money are the ones who make money. So, if they're the ones who are looking for opportunities to get long after a period of fear, then by definition, they must be the ones who are looking to sell and take profit at the top. They're the guys who buy the bottom, sell the top consistently. So, you can just inverse it. If smart money looks for opportunities when there's blood on the streets, when are they going to look to sell? Whenever there is hope, optimism, euphoria, all of those things. Now, of course, again, that's not exactly easy to spot, but over time, it will actually become quite simple. With experience in the markets, you will actually learn how to do it much easier than you think. And the key way is after all the big green candles. Right? To get actual euphoric, over-leveraged, peak opportunities to sell, it's going to be obvious. It's going to be those days where there's 3 or 4 massive green days in a row and you see on the news Bitcoin is up 25% this week. That doesn't mean you need to go short instantly. But your mindset, the opportunity is now gone. The opportunity for long is definitely gone. Doesn't mean you have to sell. Doesn't mean you have to go short. But you shouldn't be looking to get long. And I guarantee if you do this one thing, if you focus on this and start to build a plan, build a frame of reference, try and journal your emotions. I say this all the time. You need to journal your emotions every day. You will start to understand better when you should be looking for longs and when you should be looking to take profit. Then, what you need to work on is execution. Because most traders I know, who I've taught, that have become proficient, so they've become good traders, they can analyze the market well, they can understand when it's likely at a bottom, they can understand when it's likely near a top. But execution fucks them up. Because as soon as they see that fear, they want to buy. So they've conquered the first demon. They're not selling in fear. They see fear. Oh, fear, that's a good time to buy. Then they buy. Price goes sideways for a few days. And they close their position. They think, oh no, there was no reaction. And then, of course, it pumps. So you're actually right. But you have to understand time as well. Same thing. Price pumps up. They're like, this doesn't feel right. Everyone's a bit too bullish. Funding's going up. Things are a bit too euphoric. They sell. But then it keeps going up. And they get tempted to get back in and buy. So you're doing the right things. You're just timing-wise, not sticking to your guns. So here's a simple frame I have. As of today, you've seen me having a bias on Bitcoin to the upside as long as this momentum continues, right? So I firmly believe we're at a bottom. Whether it goes to 27k, 28k, 30k, I don't know. But I believe we're at a bottom for a period of time. And so my invalidation is not price, it's time. Yeah, so I'm confident in a bottom. Do I know that today is the exact bottom and we pump from here? No. Maybe we go back down all the way to the lows, but hold. Okay, cool. That's still a bottom forming. It could take 3 weeks. It could take 3 days. The sentiment shift is the same. You had peak fear, peak bearishness, price tried to go down, failed, came back up. So your expectation is there should be a reaction to the upside. But your time horizon needs to be open. If you open along because you think there's a decent chance of a bottom based on your understanding of the fear and greed, don't expect it to play out instantly. And the worst thing you could do, I made this mistake many times. If you see peak fear, FTX collapse for example, and you buy, and then it does nothing for 3 or 4 days, don't suddenly flip short. Remember, you can be right, but you might just be early. And that's why when you're trading, it's much better to focus on spot positions. And if you're going long on futures, that's fine. But certainly at the beginning, focus less on shorts because shorting is all about timing. Buying spot, timing's not a massive issue. If you buy spot in an area and say, okay, plan is in the next 2-3 weeks, this should pump. Okay, you have that leeway. You can't really get short and sit in it for 2 or 3 weeks going sideways because tops are notorious for keeping to squeeze higher and higher and higher. That's where you see those 3 pushes. And as a short, you have to have a stop loss. You have to have an invalidation. And so you should only short when you're very confident that you're on the right side of the V going down. But for the purpose of the sentiment, the gauge of the view of the market, remember what smart people do. Smart money, they look for opportunities in the pessimism, and they look to take caution and be protective whenever they see optimism. That's the way the game's played. Take that, combine it with your technicals, and that's how you get your best entries.